I'll take the turn in making sure that we get us started and kicked off. As y'all know from last week, or those of you who were here, our last meeting actually, Treasury released new guidance, and it has some fairly significant implications for our state agencies who are getting their funds that are classified as revenue replacement. So we worked through those issues last time, and this time what we wanted to do was share with you what changes we're going to make to reporting as a result of that change in Treasury guidance. So our reporting team is here, Mikey Bennett and Natalie Garrett, and they are going to walk through those changes for what it means in terms of reporting, and we hope that will make your lives easier. And then we're going to have a few general updates as we talk again about the sub-recipient monitoring training. Many of you filled out your surveys. We very much appreciate it. We just want to provide you some additional information. And then for any remaining time, we'll have some office hours. And as always, we invite you to ask us questions along the way, so don't hesitate to interrupt or raise your hand via Teams, and we'll get to you. So with that, Natalie and Mikey, if you could go ahead and walk us through what the changing Treasury guidance means for us in reporting.
Hi, my name is Natalie Garrett. I will be walking you through our the new updates for the Treasury reporting requirements for revenue replacement projects. I will be sharing my screen here. Yes. So, all right. I need to know what you see right now. Is everyone seeing?
We're seeing the preview where you can see, there you go. Whatever you just did, fix it so it's bigger. Thanks, Natalie.
All right, great. Thank you. All right, so we're gonna take it from the top here. So it's both good news and bad news. It's not the best news for non-revenue replacement projects. They're gonna have the same reporting expectations, but for revenue replacement projects, we've got a lot of great news for you. The UST updated the frequently asked questions for the SFRF final rule on July 27, 2022. They also updated their reporting and compliance guidance on August 15th to definitively limit reporting requirements on revenue replacement projects, particularly related to some of the FAFATA reporting and other subaward reporting. Here is the exact language. They kind of snuck it in there under the radar with these changes, but hopefully they will mean a great deal to the burden of work on those recipients with revenue replacement projects. So essentially what this means for you is that NCPro will continue to collect information on subrecipients and obligations for subawards of $50,000 or more for revenue replacement projects that are not payments to individuals. This will allow NCPro to continue to maintain a healthy level of transparency and to continue tracking how recovery funds are serving communities sort of at the local level and across the state. And it'll allow us to do some of that really important impact evaluation work that will help us, really demonstrate the results of these funds for the state and hopefully help us be better prepared should any sort of event happen like this for the state in the future. However, the great news is that NCPro has simplified and streamlined the monthly reporting requirements for revenue replacement projects. So we've eliminated 36 questions, primarily from the subaward reporting spreadsheet, which we will cover shortly for revenue replacement projects. And that mostly eliminates a lot of the expenditure and aggregate reporting questions and several of the FAFATA questions that have been pretty tedious for recipients to have to complete every month. So we're hoping you'll be as excited about this as we are. And just as a note here, just in case anyone, any agency representatives are also managing projects that are non-revenue replacement projects, this new Treasury guidance does not impact non-revenue replacement project reporting. So those reporting requirements will stay the same, and feel free to reach out to us with any questions about that, but that will stay the same. What we are doing is streamlining reporting as much as we can for revenue replacement projects. So I'm going to walk through what this means I'm going to be pulling up the Subaward template that everyone's been using to report their subawards and obligations and expenditures. And but we'll start here at the actual direct input questions for Pangram. Everything that you see that has red on it has been deleted. You no longer have to answer that question. Everything that is in yellow has been modified somewhat. And you will not see anything in green because we did not have to add anything. We're simplifying and streamlining. So red means we're deleting it, yellow means we're changing it somewhat, and we're going to try to make that as clear as possible here. So when you first log into Pangram to do your monthly expenditure reporting, the first question that we're going to be changing substantially, that we're going to be changing for the direct input is, did the administering agency make any new non-personnel obligations or expenditures this reporting period? We're going to be changing that to, did administering agency make any new non-personnel obligations greater than or equal to 50,000 that are not payments to individuals, or does the administering agency have to update previously entered subaward information? You'll notice that we took out, you don't have, no question about expenditures there. So,
okay.
So I gotta go.
I'm hearing a little bit of feedback. If everybody could make sure they're on mute, that would be excellent. Thank you so much. The next question that we took out here is a question about capital expenditures. And for those of you who maybe had previously reported capital expenditures, this question is sort of a lead-in question for several sub-questions. So all of those have been taken out for revenue replacement projects. So that's definitely going to make life a little bit easier. And then we'll be moving to the modified subaward attachment, which I'm going to pull up here and walk you through. If you give me just a moment here. So again, the yellow means modified, red means removed. So I'm going to share my screen, switch over to the subaward attachment. Give me just a minute here. All right. Okay. Can everyone see this subaward attachment? If everybody can see it.
Yes, we can.
Yes.
Great, great. I will move along here. So, sorry, the yellow highlighting in this case was residual from the old template. The yellow highlighting on this particular screen just means please fill in your answers here and don't enter text anywhere else. But so these are the same. You will see that the expenditures, the subaward expenditures has been redded out, meaning we will be deleting that. And then over here, there will be no more expenditures recorded in the subaward attachment, only obligations. And that'll play out. You'll notice in like later tabs, we actually deleted a couple of the tabs that contained aggregate expenditure information because we are no longer collecting that. Like I said, we're streamlining it. We're only collecting information on obligations of 50,000 or more. The help text, we have deleted this tab because we have taken all the help text and entered the help text with the actual question in each of the tabs. You'll see here that there's a little bit more detailed information. So instead of keeping that help text, just to simplify, we got rid of this tab and we added all this helpful info to the actual questions themselves. Next, the reporting guide. So the original one is kind of complex. We have gotten rid of that one, simplified it a little bit. We've created a new little reporting diagram there to help guide you through this new template. Here's where the big changes start coming in. These questions will remain the same. So you will still be entering questions about the subrecipients. So, subrecipient name and address and the reporting month, which again, that is the month during which you are reporting. So for all of the reports that are due September 15th, the reporting month is going to be September. And we'll continue to clarify that because we do understand it is confusing. So as you'll see over here, we got rid of all of these tricky sort of questions that had to do with FAFATA reporting. So all of these in red are going to be gone. And these are questions about, is your subrecipient in SAM.gov? If not, there are all these caveat questions. So So we're really hoping that that's going to make life a little bit easier for those of you who are taking care of this reporting every month. Moving on to the subawards greater than 50,000 tab, we have kept a great deal of this, but again, it is only for subawards greater than 50,000. You will not be reporting on any aggregate expenditures that are on subawards under 50,000. So again, reporting month for September 15th will be September. And then this question, the subaward type, we've simplified that a little bit. The language, the way Treasury had originally set it up, it's got several different types. We've sort of simplified it to contract or grant or direct transfer or direct payment or loan. So that's going to be simplified for you, make that decision a little bit easier. And then over here, we are getting rid of all of this information. We're getting rid of the primary sector. We're getting rid of the period of performance, start and end. We are keeping the place of performance, city and state and zip code. And that is, again, because we really are prioritizing tracking information and the impact of these funds at the local level. And that having the city and state and zip code will really help us understand where those impacts are happening on the ground. And then getting rid of the subaward description. It did always seem a little bit redundant with the purpose of subaward question as well. So because we do not have to ask it, we will not ask it. So that's another simplification there. Then moving on, we're completely getting rid of this tab. You will, again, no longer be reporting on any aggregate expenditures for awards under 50K. Same with the, you will not be reporting on your expenditures on awards over 50K or on expenditures under 50K or on payments to individuals. And that takes care of all of the tabs. So it's going to be reduced to 5 tabs or 4 or 5 tabs, and it's going to be just extremely streamlined and simplified. And we're really hoping this is going to make life easier for everyone moving forward. And then I'm going to switch back here to the slideshow. Okay. And that takes us to next steps. So the timing here is what we're going to be discussing. Your grant manager will send you an email early next week containing the newly created handbook that we specifically have redesigned to focus specifically on revenue replacement projects and the administering agencies who have revenue replacement projects. We also now have a separate handbook for administering agencies who are handling non-revenue replacement projects. I think it'll simplify things and make it less of a do I, don't I kind of situation when you're reviewing this handbook. So I hope that's going to be useful for you. I think we've tried to be very intentional about simplifying that. And that is updated to incorporate Treasury's new reporting requirements and our new reporting requirements at the state level. Also, by Monday.
Hey Natalie, let's
yes.
slow down just a little bit. Can
Sure.
you go back a few slides? I think we have a question about what you removed. Yeah. Confirming that tabs 6, 7, and 8 are being deleted.
Yeah. And I'm sorry when I have these pulled up, it does not show me if there are questions. So thank you for vocalizing that.
Okay. Yeah, no worries. I think you need to go forward a few screens and then you can see the tabs. Is that what you were talking about?
Tab 6, 7, and 8 will be deleted. Yes. The other.
Natalie, can you go back to that one slide to make the clarification? The question 6, 7, 8, those will stay. Question 5, there is a sub question about question 5, A, B, C, D. Those all the question 5 and 8 all in sub question will be deleted. The 6, 7, 8 will stay.
Thank you for clarifying, Young Jin.
Yep.
Yep. so that by eliminating question 5, it does by default eliminate several of those sort of dependent and sub questions. So that hopefully will make life a little easier.
Okay, Steve is indicating that we answered our question. So can you go back to where you were on the reporting handbooks? And Marquise is also reminding us that Monday is a holiday, just as an FYI, in case those of us forgot.
It's a holiday.
Yeah.
Monday is a holiday. We're hoping to have them live by Friday afternoon, end of business day. So this is just to let you know that if you're going to be tuning in for any reason, they will be available at that time. So, but we also, again, will be sending them out early next week as well, individually via email. The website also will contain the new blank, the updated subaward template. And moving on to step 2, to enter any new subaward or subrecipient information into the updated subaward template that we will send you moving forward. And the note here is that no, you do not need to transfer all of the data that you have previously entered onto the subaward template to the new template. We're going to do that for you. It is designed to be cumulative, so anytime you make a major change like this, we're happy to help by transferring all of your previously reported data to that new subaward template. And so we're going to take care of that for you and get all of those updated templates emailed out to you no later than Wednesday, September 7th. That being said, if in the meantime, I have a few folks who have contacted me saying, you know, I've got $0 expenditures, I'm ready to report, what do you recommend? If you want to go ahead and report on your $0 expenditures, or even, you know, more extensive expenditures, you are welcome to do that, but it will just involve the lengthier process that you're used to instead of the streamlined process. And so if you have already completed an expense report for August, that is to say, if you have already completed the expense report that's due September 15th, you do not need to redo that. We will do the same with you as we're doing with everyone, which is to collate all that data, pull it into the new subaward template, and get that back to you for future reporting. But because we're only sort of shaving down and paring down and taking things away, we will have everything we need from you if you have already reported, or if you, for any reason, are anxious to get this reporting done before next week. That won't be a problem. And if you have any questions about reporting, please reach out to your grant manager. We work really closely with them to try to make sure that we can serve you to the best of our ability. So if you have any questions, don't hesitate to reach out. And just a final reminder here that, again, the next expenditure report is due Thursday, September 15th. And all recipients, revenue replacement recipients and otherwise, must complete a monthly expenditure report, even if there is no project activity. That is to say, even if you have not made any new subawards or made any new expenditures, you still need to go in there and do a $0 expense report. And that helps us sort of track and make sure that we're helping everyone to the best of our ability, and that everyone's, you know, on track with reporting, and that we're doing a good job communicating those due dates and obligations from for our part. And I want to mention that Young Jin gave me this exciting news earlier today that previously, when folks were trying to enter $0 expense reports, it would give sort of an error message when you went to enter $0. It would let you bypass that error message, but that error message is enough to throw anyone off. So Young Jin has let me know that the data team has modified that, and you will no longer get an error message when you try to do the right thing on Pangram and do your $0 reporting. So any questions? I'm gonna minimize my screen here so I can see what questions folks might have. Yes, there will be. I see Jane. There will be office hours prior to the September 15th deadline. I believe we're having our office hours on September 13th. Is that correct, Mikey? Yeah, thanks. We will be having office hours on September 13th. And in between now and then, if you have any questions, if this is not working for you, if you're frustrated, or if you notice anything that we could clarify, or if you just need us to run through it with you, we are happy to do that.
I'll jump in with a question if that's okay. This is Greer Arthur from UNC Chapel Hill. I was wondering if you could just define what you mean by obligated and clarify the obligation and expended end dates. For instance, does the obligation date of December 2024 apply to the administering agency, or does it apply to the subrecipient? And does a signed funding agreement or award letter serve as proof of obligation?
Yes, a signed funding agreement or award letter can serve as proof of obligation. Let's see, the other question you had, to define obligation. So it's a little bit different from when I've spoken to accounting folks. It's a little different than traditional accounting. You know, in terms of obligations or subawards. For SFRF, that's the same thing, an obligation and like a subaward when you're reporting this. So if you essentially a subaward in the context of SFRF includes subgrants, it includes obligations to contractors, it includes everything except, for reporting purposes, everything except what you are spending on personnel, internal personnel. So basically, if you have an expenditure, say of, you know, $50,000 or more on something in a given month, even if you don't technically have what is traditionally perceived as a contract, if you have an expenditure to any singular entity of $50,000 or more, you will need to log that as a subaward unless it was previously reported as part of a subaward. Generally, there are formal contracts for things like that, for these sort of funds. But so basically, when you're thinking about what is a subaward for this reporting, anything over $50,000 that is not a payment to an individual, and payments to individuals can include like a contractor that is just a sole proprietor. That is an individual. Basically, think of it like this: the federal government and we don't want information on individuals. We don't want personal information. So if it's over $50,000 and it goes outside of your organization, you will report it as a subaward. I hope that helps.
Yeah, that's very helpful. Thank you. So I'm getting a little bit stuck on the obligation end date, and particularly if personnel is not counted as an obligation. What the actual end date is then for spending for subrecipients and internal personnel. So the obligated end date is December 2024. If we've distributed all of our funding agreements, then before then we would say we've obligated all of our money. Does that mean that they are allowed to spend that money all the way through to December 2026? Because those subrecipients will probably not have obligated in turn their money to anyone else. So, yeah.
And I hear what you're saying. So you're wondering if the obligated end date applies to your subrecipients as well as to you when you're giving these funds to subrecipients. As far as the Treasury is concerned, what they want to know is your obligation date. So they don't want to know what your subrecipient, you're doing your own internal monitoring and recording of that information for your own, auditing purposes or own internal record keeping purposes. But as far as what you're reporting to NC Pro and what we in turn report to Treasury for non-revenue replacement projects, we only want to know your obligation, not your subrecipient obligations, if that makes sense. We're just going that one step down. And to your question about, is it okay if they spend it after 2024? Yes, as long as it is obligated by 2024, and I believe expended by the end of 2026. Can someone quick check me on that? I believe that is the that those are the guidelines.
That does match the date in my MOU for that.
Yeah, I don't.
And then sorry,
yeah,
I can
it is obligated by the end of 2024 and expended by the end of 2026. I think it will be interesting to see where Treasury goes with that question of personnel expense, I think they're going to have to say that you will need the same staff on January 1st of 2025 that you had on December 31st of 2024. So they'll probably issue some kind of guidance that says you can't make any major kind of structural changes after that date, but that you would be able to continue to support internal personnel to carry through the programs through 2026.
Do you recommend generating some kind of documentation to demonstrate that we've kind of obligated personnel to because we're a little bit worried now for internal purposes with personnel, because we are hiring people with the intent to keep them on contract until 2026. But if that obligation is going to end,
I would think that's exactly the kind of documentation that would support those continued expenditures. And also, you'll lose some of those people that you hoped would work through the end of 2026. Some of them will leave, and you'll still need to replace them to get the work done. So I think the fact that you've set up that sort of personnel structure and funding mechanism, I think Treasury is going to have to recognize the validity of that. You know, they're trying to implement the intent of Congress here, and common sense does yield eventually. Congress doesn't want some crazy red tape to make projects fail in their last months. And so I think Treasury is going to say, you know, basically what we want to see you do is carry through your commitments that have been made prior to the end of 2024, but we do need you to clean up all your spending by the end of 2026. And there should be a nice clean paper trail explaining how that happens.
Thank you. That was really clear. I really appreciate it.
Well, it's kind of placing a bet that Treasury will do the right thing. But hey, Treasury did the right thing finally on revenue replacement. So.
And you're not the only one with that concern, Greer. At meetings we've had with representatives from Treasury, there have been other folks sharing that concern. It's a real concern. You're not imagining it. You're not missing anything. It's just, I think, and as you've noticed, and we've noticed certainly, Treasury's guidance has continued to evolve as they've learned and as they've heard from folks. So we submit these concerns to Treasury, as do many other folks working on this reporting. You're not alone in your concern, and we're hopeful that Treasury will eventually, as John says, let rationality prevail. But for now, keeping that paper trail is excellent practice, both for your internal records and for the purposes of SFRF obligations. But we're hoping it'll continue to get easier. But today, we're happy to deliver some news that we've made it a little easier for you, and we hope that it continues to, as we move through this and we learn and they learn as they go, hoping it'll get a little easier. But those are great questions. Thank you for addressing those here.
Okay, thank you, Natalie. Any other questions? And you can stop your screen sharing. Thanks. Any other questions anybody has? Okay, so we just want to talk a little bit about what's coming up next. And Jamila, can you share with us about the subrecipient training?
Sure. Good afternoon, everyone. We are working, well, one, thank you so much for responding to the survey that the grant manager sent you a couple of weeks ago. We are now working with the Friday Conference Center at UNC to host our training. So please save the date for September 27th and 28th. That will be our first training day. So it will be a 2-day training with our facilitator, Van Malone from Management Concepts. So you'll receive in the next week more information on how to actually register for the training. From all the responses, we noticed that many of you wanted to send between 2 to 4. There was some agencies that needed to send more individuals. So we're going to have at least 4 spots for each agency initially, and then we're going to also look at hosting some additional trainings in October. But if you're not able to attend the training in September, you'll also be able to send a representative in October. But please save the date for September 27th and 28th for the training for this month.
Thank you, Jamila. And I also wanted to add that I think there's been a little bit of confusion about whether or not you need to come to the training. If you do not have subrecipients, this is about subrecipient monitoring. So if your agency is just using your funds for your agency and you don't have subrecipients, then you do not need to attend this training. I just wanted to make sure that was clear. And your grants manager can answer specific questions if you're concerned or you have any questions about that, or Jamila or I can as well. So just let us know. And then after that, Jamila, are there any other next steps or things we need to share?
The only other next step, we'll be sure to send out this PowerPoint presentation that Natalie shared with everyone. And then as she mentioned, you will receive your reporting handbook guidance tomorrow or early next week.
That's right. And as Mikey pointed out in the chat, we'll have office hours. So we'll make sure y'all are aware of those as well before we get to the next reporting deadline. And we are going to stay on the line. So if anybody has any additional questions or wants to stay for optional office hours, the NC Pros team will stay here. Otherwise, I hope you have a lovely holiday weekend. Thanks, everybody.